Innovate. Enable. Prime Minister Narendra Modi gave a clarion call to reduce crude import dependence by 10% by 2022 from the current levels of about 80%. Critical in boosting India's energy agenda will be the success of its new exploration policy, hydrocarbon exploration and licensing policy, or HELP, which seeks to attract investments from the domestic oil and gas blocks. The new HELP regime marks a radical shift from previous cost recovery model to a revenue sharing model. India needs both technology and risk capital to unlock its immense hydrocarbon potential. What strategies need to be crafted and deployed to re-energize India and transform the oil and gas sector? Presenting Re-energizing India. Focus on oil and gas on Global Natural Resources Conclave.
The potential of India's oil and gas sector, the need to re-energize it, the need to unshackle it, the need to move beyond the constraints and actually be able to capitalize on the opportunities. I think those are some of the issues that we will be discussing and debating here with our panelists this morning. Mr. Saraf, let me start by asking you, sir, the challenge now is to actually bring down our import dependence. The challenge is to up our production, and the target that the Prime Minister has set is bring down our import dependence by at least 10% over the next few years. How feasible, how realistic is that going to be?
Prime Minister Modi gave us a challenge that by the year 2022, when India reaches its 75 years of independence, by then we should reduce the import dependence by 10%. And this 10% number in the first look may appear to be very small, but it's really challenging, and that's what we are all supposed to do within this time frame of less than 5 years from now. What has been done? Ministry constituted a task force to chalk out the program year by year, and different company by company, private companies, public companies and all, and whatever job has been assigned to ONGC, we are very, very confident that we would do that. What we have done in turn, that we ourselves have looked at all our discoveries which we have made till now, and discovery by discovery we are in the process of making the development plans, and all the development plans, the production therefrom would add to whatever job has been assigned to us. And we had our own strategy meet a couple of weeks back, and from 8th of this month we are having our key executive meet where we are rolling out this plan, and the company is very confident that we would achieve that. What
are the targets that you are setting for yourself at ONGC? And I'll ask you this in the context of the data that we now have to contend with, because crude production in India has actually decreased by 1.5% in FY16 at 36.4 MMT. What is the target that you've actually set for yourself, and how do you see these numbers changing?
You see, Shareen, the most of the increase would not come from crude. Crude would increase by maybe 15 to 20%, which is not enough. But most of the increase would come from gas, and as the Honourable Minister also said that we are going to be gas-based economy. The gas is cleaner fuel, and gas demand is going to increase very much. And our gas production from last year till the year 2022 is going to almost double.
Mr. Atanu Chakrabarti, the Director General of Hydrocarbons, sir, if I could come to you. One of the problems that one is actually seeing when we talk about production is the decline of mature and aging fields and not enough production from the new and marginal fields. How do you ensure that we actually get this balance right, given the fact that this is going to be a critical challenge that we face?
Let's look at it in a few layers. First is whether we are in line for tying up plans for production up to 2022 to actually meet the target of 10%. And then how at the policy level that will ensure that all these projects actually are bankable and meet the market requirement. What will happen that through the very layered program that has been discussed regarding replacement, efficiency and everything, we need to add roughly 37 million ton equivalent of oil and gas over next 5 years, which is roughly the same as crude oil that's being produced today. So that's the kind of challenge that we have. How we are going to meet it? Roughly 5 million ton additionality after controlling that decline would come from oil. But the major contribution, today we are producing about 80, 85, 90 MCM3 of gas, which would go to roughly 165 million standard cubic meter per day of gas.
Yeah.
Now, those are the plans which are already in place, either by our national oil companies or through PSCs. I am not putting additionalities that will come from discovered small fields or additionalities which will come through the help round, which would be launched through OLP from 1st of July or through production enhancement contracts. Therefore, this is something which is very much in place. Now, how that's going to be achieved in the time frame through a policy structure, we already have the PSCs and everything in place, but the most important thing is that they will have market fee. And secondly, they will have market access. Now, these are the two essential pillars on which it rests, apart from the fact that even in PSC, the regulatory burden has been very, very substantially brought down, which makes the life easy and much more breathable for our private sector partners.
Mr. Gupta, let me start by asking you, 3 or 4 things that you believe within the private sector, with all stakeholders, government participation, the regulators here, what needs to be done to ensure that this sector truly is able to achieve and deliver on its promise and potential?
Government took over. They deregulated the diesel prices from October 2014. So while they have deregulated the prices, and it is believed that this is set by the market forces, I would expect that in next 3 years' time, there are really market-driven prices of petroleum product in the sector. Because there is still, I will not say that they determine, but there is a guidance, looks like. So this is one. And second, of course, from refining side, I would say that this 10% reduction which Prime Minister has set for the industry, refinery industry has to contribute a lot in this, because we have to extract more and more from the same molecule.
Yeah.
And I'm glad to tell you that 15 years back, on an average, Indian refineries were extracting 62% or 65% at the most of light and middle distillates. Today, most of our refineries are between 80 to 85%.
Okay.
And we have to make sure that we extract more and more, and we become
leave us with a target for yourself, sir, for the year ahead.
My own target, we are one of the best refineries in the world. We are already at 84-85%. So our target is more towards energy conservation, which means that we will import little less crude and produce more products. So maybe that is our target.
Well, that ties in with the national ambition and the national aspiration as well.
Yeah.
Okay. Hopefully we will see the deal close sooner rather than later. Yes, Roberto, go ahead.
Yes, good morning. I just wanted to bring the debate also in the space of what is changing in having this debate today versus maybe just 5-10 years ago. 5-10 years ago, COP21 was not there. Common objective between government, but also of companies committing to do something on climate. And oil and gas, we have the Oil and Gas Climate Initiative putting $1 billion to address climate change and others. So there is a big change in the debate today on climate. There is a big change in terms of geopolitics. We all know that with the Shell oil and what is happening in the US, the power of OPEC has modified. And so Saudi Arabia is now brokering deals not only within OPEC, but in the broader space. The third big element of change is this element of the digitalization. Again, was referred to, but I'm thinking how the industry is going to adapt to the transformation, the digitalization of the economy, not just of the industry. And fourth, that is a very, very important and relevant element to the oil and gas sector, is how the electrification of the economy is going to be playing a critical role. Because, of course, transport with electric vehicle will have a big impact. But I think it would be interesting to understand how India is thinking at the evolution of the oil and gas sector, not only on the basis of more production, that is certainly a need, but also in the looking forward, how the energy system is changing overall.
Okay, you want to take that?
So if we're talking about the role of the oil and gas sector versus the broader energy sector, I think, first of all, energy demand globally is slowing down tremendously. It's going a lot slower, partially because of the trends that you mentioned, Roberto. However, counter to that, it is also clear that India is, together with China, the biggest growth engine globally of energy. And I think this is not a question of either electricity or oil and gas. I think it's and for India. All of our models, even the most sort of aggressive technology scenarios, suggest that for an economy like India, you're going to need a lot more oil. We expect around 4 million barrels addition in the coming 15 years. And a lot more gas and a lot more power.
Let me continue to get in the private sector's perspective on how significant the changes have really been within the sector in the last 2 years or so, and whether we are likely to see big ticket foreign direct investment or domestic private investment in the sector. Charlene, let me start by asking you what you think in terms of the regulatory environment changing, and whether we are going to see a significant uptick both in terms of FDI into the sector as well as domestic private investment.
Certainly there's been a perceptible shift in the last couple of years. We've had a sort of hiatus over the last 7 years. When you recall, the last licensing round was in 2009 under the NELP regime. Since then, there's been a bit of a hiatus on investment in oil upstream and production E&P areas. With the change of the government, it started I think there was a lot of thought which went into it. It started a bit slowly, but it's picked up now. And I think we're very encouraged with the policies that the government is now putting on the table. It's starting small with the change of the regime on the from production sharing to revenue sharing. Some investors may still have issues, especially the ones who might want to get into deep waters or high temperature, high pressure reservoirs. But the government is taking a separate look at how they can make that area also worth the while of the investors. We've had the discovered small field rounds, which are developed fields. The government is hoping to get hydrocarbons in 3 years from now. And all this is designed to actually try and curtail our oil demand, or rather the oil import bill, by 10% in the next 5 years. And it has to begin with the operating assets too. We have to, most of the fields that we have in India in the E&P sector are declining. They are on a declining profile, which means that we have to get on to enhanced oil recovery processes, improved oil recovery processes. A lot of thought is going into that. The government is also looking at it by way of providing some sort of relief. Just to give an example, in the North Sea, the UK government has absolutely removed all tax on initiatives under the enhanced oil recovery field development processes. So it used to be around in excess of 30%. They made it zero now. You need collaboration with the government. And the element of trust which was missing from, I would say around 2008 to 2014 is now being regained. It has to do with the government, with the private sectors. It works both ways. You can't expect the government to give you relief and not do your bit. So the private sectors also has to put in the money where the mouth is. For some companies, they're still waiting and watching, and I think the game change is going to be deep water exploration as well as open acreage licensing through a new data, national data repository.
So since you said that it has to be an era of collaboration, and there is the trust deficit that we had seen over the past few years, that has now started to ease. So Ashish, if I could ask you to take that conversation forward. We've seen several changes that the government has made, several changes that the industry has welcomed, whether it's moving from profit sharing to revenue sharing, and other important changes that we just heard the panel talk about. Given that, in terms of the unfinished agenda, what more is it that you would like from a policy point of view for the government to address, as well as perhaps, when we talk about this business of partnerships and collaborations with Indian companies like ONGC, what is it that you would like to see?
On the policy side, a lot has been said already. I think the last couple of years have been very positive, and what the industry would like to see is continued movement and a policy which is well established and predictive. As a technology provider to the oil and gas industry, I would say right now is as exciting a time as any to be in the Indian oil and gas industry. ONGC is working on deep water in a really big way. Cluster 3 is coming up, which has got high pressure, high temperature, ultra deep water, which will make it one of the most challenging projects of its kind in the world. Cairn starting to work in a very aggressive way on EOR, on tight oil, tight gas. All of this requires some of the best technologies in the world to bring to bear. Which makes it very interesting. And for all of us as equipment, solution, services providers, they will all involve FID in some small manner, which we are all looking forward to doing over the next few years. So I would say very positive movement. We would love to see more steps in this direction. I think a lot of these newer, more complex programs will all be driven by collaboration. So I think if you take everyone from ONGC to Reliance and BP and to Cairn Vedanta, there have been very clear, specific requests that have been made. I think those are all well understood. I don't think I need to repeat that.
Okay. Johannes, you want to add to what you would like to see, both from a policy prescription point of view, as well as what will incentivize the private sector to do much more within this space?
At the end of the day, the question is what's in for me, and not what does it cost me. When you look on India, you always look on the cost and what's the hurdle. I like the words from the minister about digitalization. I think if I see what happens in Singapore, where I have one of my offices, the ease of doing business there is tremendous. Yeah? You do everything online, there's no corruption, it's perfect. If I compare how to do business in Austria and Europe, the amount of regulation requirements we are facing is tremendous. Mm-hmm. If I look on India, you probably still have a little bit to catch up.
So we're somewhere in the middle.
You are certainly in the middle. At the end of the day, the question is, what can the investor bring to the table?
Yeah.
If I'm the investor, then I look on India as a place that is in a competitive environment. For me, the question is, do I go to India, or do I maybe go, let's say, to the shale play? Do I go to West Africa or Brazil? Mm. We do a lot of work on strategy advice, and I have to tell you, India is not on the agenda.
Why not?
Well, because it's not yet attractive enough. I think India has to live up a little bit more to come into the focus of the BPs and the Shells and other companies, maybe also on the upstream, not only on the marketing side.
But what makes India less attractive?
I think we have heard a lot about taxation, and taxation is a hurdle. It's a cost. The red tape is still an issue.
Well, thank you for injecting a little bit of a reality check on the panel. Atanu Chakrabarti, let me get you to respond to the comments that have come in here from Johannes, that India is not as attractive as we would like it to be, that at this point in time, foreign investors specifically continue to be concerned, as we just heard from our panelists here, about things like retrospective taxation. A lot of those pending issues have not been resolved entirely so far. How would you respond to the comments that you've just heard? And what do you believe the government needs to do in order to allay some of these apprehensions, specifically when we talk about wanting large ticket FDI in the country?
Well, on the attractiveness of Indian economy and particularly on oil and gas sector, just to add another perspective to the touch of reality that you mentioned, is that we already have a committed investment of about $30 billion over the next 5 years through private sector investment proposals, including ONGC, of course, because they have a level playing field. They come as much through competition as much other people do. This stands in comparison over 20 years investment of $40 billion in PSC regime. So you could see the pace at which investment is coming. As I had earlier mentioned that I'm not counting in investment through OLP, investment through production enhancement contract, which are essentially brownfield projects which will get a lot of attract a lot of investment, and larger investments which recently extended fields like Cairn and other we have. However, one of the things which had come and perhaps has not been talked about has been about market structure. Everybody talks about a price, but the price points can only be arrived by a market structure. Incidentally, India has a right structure. It has legislations for in PNGRB, common carrier open access kind of a thing. Government has already moved towards a market price, but I guess some more discourse about how a market structure where prices would be arrived rather than asking government that give me a price. How does government give a price? It doesn't want to set a price. It wants a market price. So I guess turning the discourse towards that end, then simply asking for a price would go a long way in further augmenting FDI and domestic investment.
Well, I think that pretty much sums up the opportunities and challenges that the sector faces in India. I think we've discussed what the private sector can do in partnership with the government, what the private sector can do in partnership with each other, and what the regulator as well as the government can do to provide an ease of doing business and to facilitate greater investments into the sector. Ladies and gentlemen, thank you very, very much, and many thanks to our panelists for joining us here this morning and drawing out an action agenda for change. Thank you very much.
Focus, ideate, innovate, enable.